started implementing the base erosion profit shifting action plan ever since it was finalized in October of 2015. This year's budget introduces the limitation on interest deduction, which was guided by Action Plan 4 of the BEPS project. This would mean that an Indian company or a permanent establishment of a foreign enterprise operating in India, the limit, if it's paying interest to its associate enterprise across the globe, then the interest would be limited to the 30% of its earnings before interest, tax, depreciation and amortization. Interestingly, this is not only limited to associate enterprise debts, but also covers third-party debt across the border, where there is a explicit or implicit guarantee provided by associate enterprise. There is a relief to the taxpayers in a sense that what the interest that is not allowed gets carried forward to be set off against future profits and gains for a period of 8 years. As one would recall, India had already introduced some of the BEPS action plans in its Income Tax Act last year. Earlier this year in January, the Central Board of Direct Taxes formed a committee to implement and chalk out the BEPS implementation in India. The Indian taxpayers are looking forward to the rules which will enable them to comply with some of the action plans that got implemented, may it be country by country reporting or master file, as also it is looking forward to some practical guidance on Action 8, which pertains to the transfer pricing outcomes being aligned to value creation. Once the rules are out, and then the practical guidance is also brought in, hopefully the taxpayers will be able to comply because this applies to the current financial year, which is year ending March 31st, 2017.